Now we want to finish up what we started in part one. So we need to finish up the indirect cash flow statement. So the first line of the indirect cash flow statement is net income, and now we do have some income because we sold shoes. So we can link this. But again, we can link this to net income. If we get out of the income statement, that's that number. Hit enter. And now we need to determine what the increase or decrease in our inventory was. If you remember your advanced accounting, intermediate accounting, the indirect cash flow statement, we are analyzing all of our current assets and current liabilities for changes from one period to the next. So the changes that we have, the current asset we have is inventory. And the changes that we've had are from the first period to this period. The first period is day 1. This is now month 9. So if we go and look at what those changes were, pull up, we can see that the changes were from here to here. So from 0 to 896. So inventory has increased by $896,000. Now, an increase of inventory of $896,000 is a use of cash. So we want this change to be a negative number to denote a use of cash. So being careful in how we set this formula up so that we will come up with the net negative number that we want. We type equal, because it's a link, and the formula will be day 1 minus month 9. And we hit enter. You can see now we have a negative number, $896,000, which is what we want. Now, for the rest of the cash flow statement, indirect cash flow statement, we have no financing. We have no sales of stock. We have no loans for this period. But we do have the purchase of fixed assets. And we also want to show that as a negative number. And we want to link that to this purchase of fixed assets. So we do equal, and we click on that. And there we have our negative $200,000. Total change in cash would be the sum of this column. So we equal sum, and we sum everything up from there. Sum down, close parentheses. So now we've had a net change of $1,146,834 as an outflow of cash. Our beginning balance is our ending balance from the previous period. So we say equal, and we tie to this ending balance from the previous period. And our ending balance we should be able to drag this over. We get $2,853,166. How do we know that we're correct? Well, because this ending balance here equals this ending balance there. Okay, so now the last thing that we need to do is just to clean up our financial statements to make them look a little better, to note the areas that are the variables. If you remember, we put sales in, and that was a variable. So we need to highlight that in green. So hold on for 1 second. My little thing is not coming up here. said before, we often have the glitches. Okay, there it is. Oops. Okay, and so we have that in green, and then we want to highlight these in green because these are also variables. And we want to also highlight this in green because that too is a variable. And we want to highlight this in green. That is a variable. Those are numbers that we wrote in. Okay. So we don't have lines or anything in here. We can put those in also and make this look like a really professional presentation. Hands come up and that. We add lines here. And we can add lines, a line here. And it's better to make it right than to be pretty, but after you make it right, then you can, in fact, make it pretty. One second. This. Hold on. Okay, I can't seem to find the line for that, but that's okay. I know you'll be able to do that. So this is going quite slowly. Sorry about that. Okay, so now you have these financial statements done. We have a balance sheet that is balanced. Assets equal liabilities are known as equity. We have an income statement. We have a direct cash flow statement, and we have an indirect cash flow statement. And in a like manner, we are going to do month 9. You can generally tab that over. We're going to do month 10 rather, I'm sorry. In like manner, we're going to do month 10. So I'm going to leave that up to you, but you can complete month 10 in the very same way that you did month 9. Okay? Any questions? Please ask.